All right, moving on, electronics company Indkal Technologies landed an investment worth $20 million from its existing investors. The startup aims to use this fresh capital to fuel growth of its brand Wobble Displays. In addition, the company will deploy funds to strengthen Indkal's research and development, enhance its sales and service network. To discuss the company's growth plan and its vision for Wobble Displays, we are joined by Anand Dubey, the CEO of Indkal Technologies. Anand, thank you so much for joining us on Startup Street today. It's great to have you back on the show. Before we get into the rest of the fundraise, what strategic advantages does this recent $20 million Series B bridge funding provide to Indkal Technologies and its brand Wobble Displays?
My pleasure, and thank you for having me again. It's obvious. I mean, obviously, we are a product company. We rely on our capability to create better products which are tailored for the Indian market, and that's something that we've played a real emphasis in the past 5 years of our existence, and that's where I think fresh impetus is going to be put in. The new funding obviously allows us to strengthen our product development capability. Helps us take these amazing products that we're developing in display technology to different parts of the country, and then make sure that we're strengthening our after-sales service capabilities, which are obviously something that play a very large part in the trust that we are going to be able to build with our customers. And that's essentially what we're going to be using this new round of funding for.
Sure. And, how does Indkal Technologies plan to sort of utilize this fresh capital to innovate and expand its product portfolio? What's new on the anvil, especially, in the premium television and display segment?
It's going to be important to see how the market evolves, because the television market in India has been, in general, hasn't seen a lot of growth. Which means obviously you're fighting for place in customers or consumers' homes. With a lot of different brands. And what sets us apart is our emphasis on developing larger screen size televisions. That's something which we've been working on for a long time. We've introduced larger and larger screen sizes in the past, and then developed display technologies like QLED, and then even on top of that, now a mini LED television in a large screen size television. We think the market is shifting towards more premium products. Even if the volume growth hasn't been there, we've seen the average screen size in India rapidly grow. It's now in 40s, more than 40 inches. We expect it to get closer to 60 inches eventually. That's where a lot of more developed markets are. China market is close to 60 inches in terms of the average display size that we see in a television being consumed consistently. That's where we see the shift happening, and that's why the emphasis is on developing not only large screen size televisions, but also developing display technologies which create a better immersive experience for our customers.
Absolutely. So you are seeing the shift to a more premium segment. So in the light of this, how significant is the launch of the Maximus series with the 116.5-inch TV in the context of India's consumer electronics market and display technology innovation?
Sure. It's disruptive. It's disruptive because now the screen sizes which were unheard of in the past, 116.5, 98 inches, 86 inches, which are typically not consumed in the Indian market. Our effort will be to bring them closer and closer to more accessible price points without compromising on the technology that is available. A lot of it is now being enabled because there's such emphasis from the Indian government as well to try and push for the research and development to happen here. Component manufacturing ecosystem is developing very rapidly. So next 3 to 5 years, we see that very quick jump from where we were, which was a very EMS assembly-based infrastructure for product development and manufacturing, to a genuine hardcore research and development-based infrastructure, which will allow us to democratize some of these very large screen sizes, which we definitely want to consume, but have been sort of out of reach in the past few years.
Absolutely. So you're calling this a disruptive move. And if you could then take us through, the kind of revenues you're currently clocking, and where do you sort of hope to end this year? Also, what's the kind of impact that you hope to see from the GST rate rationalization?
Right. We closed last year at around 850 crores of revenue. This was our third full year of business. So we've consistently seen immense growth, and we've been fortunate that way. The GST reform is massive. It is closer to 8% on larger screen sizes, and this sort of reassures what we were talking about in the earlier conversation, which is a shift towards larger screen sizes. Anything above 32 inches was at 28%, which is now at 18%. So that massive drop in prices, along with what is happening on the product manufacturing infrastructure setup that we have, both for the finished goods and component level manufacturing. This will spur up the demand, and we've seen a lot of latency in the past 3 years in the television market where the volumes haven't increased much. That is probably attributed to the fact that the screen sizes were expensive and most households were still consuming only one television in general and max two. I think that is going to change rapidly, and now we were going to see larger screen sizes being adopted because of the price drop, and the number of screens per household increase rapidly in the next 24 to 36 months, which will give even more motivation to companies like us to come in and try and develop better products, bigger products at better price points for the India market.
Sure. And, if you could quickly tell us in 30 seconds, what challenges does Indkal foresee in scaling up its premium product offerings and expanding its sales and service network across India?
I think the challenge will be, obviously, we're new to the market, and this is something we will have to demonstrate on how much progress we've made and how far we are in terms of our product development and quality infrastructure that we've built. We've seen our portfolio in televisions. We're among the top 5 players now in the country in terms of volume across all our brands. The hope is to obviously get into top 3, and then for that we will have to continuously demonstrate that not just the product but also the service infrastructure is developing rapidly, and customers even in deeper pockets of the country can look at Wobble as a viable option for their television consumption needs. I think it's a slow process. It's something that we obviously have to keep on reinforcing through high quality products and great service. So more than challenge, I think we see it as an opportunity to continuously keep doing this over a longer period of time, something that we've done in the last 4 years. We have to keep on doing this
Sure.
over 1 decade for us to be able to get that position.
Also, this $20 million is part of a bridge round, right? So you're also looking to raise a further $80 million. Can you sort of elaborate on the fundraising plans and when you hope to close this larger round?
So I think it's still, because we're still closing the bridge round, that's we will start taking in the process. We will start the process of building the larger round. The hope is to finish it off by the end of this financial year. So March is when we're hoping to finish off the larger round. I think a lot of things depend upon what happens between now and towards the end of the year. Obviously, with the GST reform, there's a lot of optimism in terms of the growth of business. Obviously, we're also trying to reassess and try and see where we can get after this massive opportunity has been created. Financial year end looks like a good timeline for us to think about the larger round being completed.
So you're looking at the financial year end to see the larger round close. All right, Anand, thank you so much for joining us on the show today, and we wish you all the best on this journey going forward.
Thanks for having me.
Well, with that, it's time for us to head into a short